What's going on, guys? Welcome into another episode of Money Moves. As always, your host, Mr. Matty A, and of course, my co-host, Mr. Ryan Breedwell. We've got a hot topic on today's episode. Nuclear war has entered the discussion, and how is this impacting your portfolio, your investments, the stock market, the economy as a whole? We've got some inflation updates, as well as some additional data to dive into oil. And the potential spike of it is becoming a major point of discussion in the recent news. We've got stock market rotations and volatility that Mr. Breedwell is going to give his insights on. Are rate cuts still on the table, or are we going to see something a little bit different? Real estate is becoming a little bit more challenging and potentially more opportunistic here in the very near future. Could be one of the best buying opportunities that we have seen in decades. We're going to dive in on today's episode. Stay tuned. Well, I don't know if there's too many other topics to start with beyond the U.S., Israel, and Iran conflict. We've got a lot of tension in the Middle East. I mean, that might be underselling it for everything that's going on with the U.S. Coming in and bombing. We were essentially the provokers, noting by Trump stating that we had to do it first or they were going to do it. There's a lot of questions around whether that was warranted or not. But let's talk a little bit about how the markets are responding. I don't know if this is accurate based on, where the market sits today, but it looked like been some red mornings, some volatility. I think I saw something around $1 trillion wiped out of the stock market. I'm assuming some of that got bought back up. What are you seeing based on what has transpired in the Middle East over the last few days?
So essentially, it looks like to me when I'm looking at charts, we had about a 1,200 point trough on the Dow midday, and ended up down about 400 points. So I would say a volatile day, but down 83 basis points, which is normal volatility. Nasdaq down 1%, normal volatility. S&P down 94 basis points, normal volatility. The VIX spiked, the volatility index spiked on futures up to 25%, I think, midday.
Damn.
That ended somewhere down around, I'll pull that really quick again. But, up 5.6% for the day. So the majority of the pullback was absorbed. And it looks like it was a mix of retail and institutional investors. I know that I had a bunch of client money that was pending to be traded, and I put it all in the market around. I didn't catch the bottom. I was about 25, 30 minutes early, but we got a lot of good deals for people putting money in today. But it's not outside of normal volatility. I mean, we had this type of volatility with the Russian invasion of Ukraine, and that's still going on. So I think people got to be very careful on the geopolitical risk pullbacks. They sound a lot worse than they are. We don't really fight wars the way that people think about in the concept of what they learned about in their classroom when they were going to high school and middle school. It's very much like proxy wars through developing countries, financial constraints, things of that nature. And then, hey, we're going to go fire 100 Tomahawk missiles from 80 miles off the coast. So there's a lot less direct conflict that goes on. And so I think direct conflict is more what people are like bracing for, but I don't think we're going to put very many troops on the ground. I think we're going to put troops on the ground, but I don't think we're going to put very many troops on the ground to where it would be considered like a ground invasion. With that being said, I believe the statistic is 81% of the Iranian people that were surveyed are not happy with the current regime and want it replaced. So, thank God. I mean, I'm sorry I'm not. I thank God we got rid of supreme leader. He's just a terrible. He just would
I'm not.
stoke.
I'm not mad at that one bit.
I'm not mad at that. I'm not saying Trump doesn't either, but I mean the language and rhetoric used is so aggressive, and it gives that religion a bad moniker. People assume that all Muslims are extreme. Myself, I get those feelings sometimes myself, because what do we see? Extremism.
Yeah.
With that being said, it's a scary time to be in the Iranian leadership, because I literally think today at sometime around 10 o'clock Pacific time, I got word over the wire that they met because now two supreme leaders have been killed within 24, the second one within 24 hours of getting elected. They met again to vote today, and Israel leveled the compound where they were voting, and I think killed almost all, if not all, the people. So they're just I'm not saying Israel is good or perfect. We talked about this. I said the enemy of my enemy is my friend, and I have nothing wrong with Israel. But they've been waiting for this for 47 years. They are like absolutely primed for this. And I would say Iran also has a lot of contingency plans. I just don't think they're going to put up the fight that they're saying they are. And I'm fairly certain by the end of this week, it's going to be made very clear that they're well out of their breadth. And they're attacking people left and right. We had another consulate attack today in Dubai, an American consulate. We saw video, unconfirmed attacks in China. They hit some military bases that were occupied by the French military. It's very reminiscent of how Japan was acting in World War II before Harry Truman had to make a very hard decision. But he had to decide, am I going to commit to a ground war where I'm going to lose hundreds of thousands or millions of American lives? Or am I going to have to risk innocent lives of the combatant? And unfortunately, the latter is the option. And that hopefully puts pressure on the regime to secede, and it did in Japan, because they essentially said they were never going to surrender and they were going to fight us till the last person died. And that is really what it sounds like from the current leadership, the current regime. Not necessarily the Iranian people, but the people that are in charge. And that is the problem.
Yeah.
So financially, I was telling multiple people to put money to work today. I still think there's time to get money into the market and get some good deals. But historically, war or wartime events or anything where we're using munitions or planes or any wartime item, that's really good for the U.S. economy. Like, really good. We're looking at names like Raytheon. We're looking at names like Lockheed Martin, Boeing, um, Northrop Grumman. I mean, all these U.S. aerospace and defense contractors, and they are going to get orders out the wazoo and tons of government contracts. And that translates straight through to their stock price. We saw a lot of U.S. aerospace and defense up today, and those were the real winners on the day as far as equities were concerned. I'm not worried about it. I'm really not worried about it. Iran is not, in my opinion, a world threat. I think they're a threat to people around them, but I don't think they have the capacity nor the technology that they claim they do. And they're very much kind of like a more developed North Korea. Like, they use propaganda, posturing, and proxies around other areas, and they fund terrorist groups to cause disorder, and that's their MO. The world would be much better off with those specific people doing that specific thing, not here. And so, and the Iranian people agree, like, wholeheartedly.
Yeah, I've got a lot of friends that are, either were born in Iran. There's a handful of guys that I've either been in masterminds or, just know through business. And when I say like 100% of them supported the eradication of that leadership and that regime, I mean 100% of them.
Wild not to.
Yeah, I mean the atrocities of that administration, not only amongst the globe, but specifically like their own citizens and people. And I know a lot of people, especially in the West, we don't get to see firsthand like some of the stuff they're doing, not only to American citizens or Westerners, but like specifically their own people. It's pretty insane. And when you go back, I kind of went down a little bit of a rabbit hole. When you go back into like the 60s and the 70s,
They were westernized.
they were a beautiful, awesome country, honestly, in a lot of ways,
You can
right?
blame France, honestly. France is pretty much. Oh yeah, the French are. If you really want to do some research, Google it. I mean, I know you guys think I'm just wild Bill when I talk sometimes, but if you listen to me, you'd be pretty well off. The French government let the Ayatollah, like, what's it called when you go to a country and you're trying to seek like safety? What's that called again?
Oh, yeah.
I can't remember the word.
Yeah.
They allowed him to stay in Paris, give orders and navigate the overthrow of the Iranian government. And then they flew his ass back to Iran on an Air France jet back in 79.
Yeah, it's kind of crazy. I mean,
So
it's
just like,
for me, and we can kind of wrap this one up a little bit, but I think, part of me, and this is obviously, I think, depending on how you feel about this, right? Trump saying that, no new wars. This was initiated by us, and specifically even Bibi Netanyahu yesterday, I think it was like Fox News basically said, uh, I wanted to do this, but really like it was Trump. I think that, somewhat can hurt him and his, overall narrative of no new wars. It does feed into the industrial war complex that at the end of the day, has somewhat made America as powerful as it is, right? Like we get into forever wars and we police the world because we obviously need to protect the dollar. We need to protect our interests. We need to get the energy and resources that we want and know. And, love us or hate us, we are the machine and the power we are today because we've got sharp elbows and done a lot of these things. So part of me as a human doesn't like to see the collateral damage that you talk about. There's a lot of innocent people that get caught in, the crosshairs of people chasing greed, power, money, energy, you name it. And at the same time, I also know that, I would want to be on the right side of that. And the world is honestly a safer place because of it in a lot of ways. There's many arguments that can be made and justified of, the alternative stance of that, and I get it. But at the end of the day, in the sake, in the context of investments, just the overall, globe being safer from, extremist ideology, I do know that we don't take that lightly, and this was one regime that obviously has been a threat to that. So, short term, we saw some major red days, but get bought back up, create buying opportunities. It looks like smart money is coming in.
68 and some change. I mean, it's really not down too much off all-time highs.
Now, I saw this to kind of give a little insight around or I guess to give more dialogue to those that maybe aren't as bullish as you and going, hey, this is, just like you've said it many other times when geopolitical tensions, rise up and create what in hindsight have been buying opportunities. If this escalates to a more long drawn out war, even, God forbid, something extreme like nuclear war, can this have a much more catastrophic effect on the stock market? And to give a little context to that statement, the S&P 500 has been trading somewhat in a range, and you correct me if I'm wrong, for a handful of months, right? And if we start seeing closes pulling back a little bit instead of moving the needle forward, is this something to like really pause and reflect and kind of see how this plays out? Or is this where people should be making their shopping list of stocks that they want to own and knowing that there's going to be an opportunity to get them on discount?
I think we know the answer. And the answer is back the fucking truck up and buy as much as you can. I'm not playing. Tell me a time when you show me one financial crisis. You show me one pullback. We may go lower. We might go lower. I'm saying it right now. But guess what's going to happen eventually? And drum roll, please. It's all going to come back and then some. And you're going to get paid yield the whole time. And you're going to be buying everybody else's soft-handed decisions at a discount. And then they're going to be boo-hooing and bitching while you are freaking getting rich. That's what happens every time. If you bought the dip during COVID, if you bought the dip in 2022, if you continued to buy through a contracting recession, essentially just trading in a range slowly down, but always going down in a range, just chopping down. If you bought that and you're holding those stocks there, go look at the price of Apple back then. Go look at the price of Nvidia. Go look at Palantir. Go look at all these other names and what they're trading at today. And you're going to say the same exact thing in 24 months or less. And I might be being aggressive. 24 months or less is like the worst case scenario. I don't think there's anything to worry about here. And prove me wrong. That's all I gotta say. Why would 2/3 of the dip get bought up today on news that we had no positive news today?
Yeah, there wasn't.
Zero. There was no, hey, there's a negotiation. Hey, in fact, there was more negative news and us saying, hey, we're not going to trade with Spain, even though I don't know how we're going to navigate that because we have trading agreements. So that'll be interesting. Yeah, there was no positive news. But you know what smart money is doing? Not selling.
Yeah.
Definitely not selling. This is going to be done probably in a couple weeks. We've never killed this much of the leadership, not this deep.
Yeah, I mean, I think it was like 20 or 30 of their top generals. Like, there's not even anybody to choose.
There's nobody to lead. They're eventually going to get so far down, they don't have anybody anymore.
Yeah.
So I don't think it's going to go on for very long.
Oh, I hope that's the case.
There might be volatility, but I'm advising my clients.
Well, I don't think
100% put any discretionary income that you have that's extra. Forget Starbucks. Go buy some missiles. Go buy some Raytheon. Go get in the stock market because it is down and it's going to go back up. I guarantee it.
Well, let's talk about that real quick because February was an interesting month. You know, money came out of tech and discretionaries and went into utilities and energy and defense and materials.
Yeah, that was
it looked like there was, a rotation into value. Does this feel defensive, as if they kind of felt like this conflict was going to pop off, or is this inflation positioning? Like, what does this rotation imply about how smart money sees the next few months or quarters, in the stock market?
Well, really, the biggest areas that got hit were communication services, tech, and consumer cyclicals. So Home Depot and stuff like that. But that's all the stuff that was getting bought up too. So there's plenty of appetite for those names at these levels. And if you think that people are buying this much at these levels and they're not going to buy when the market, I anticipate institutions heavily taking advantage of this and loading up and doing what they normally do and just beating the consumer to the punch because they don't trade off emotion. They know no matter how far it goes down, they know it's going to come back and go all the way back up. It's like the non-guaranteed, guaranteed thing that's going to happen. I don't know how far it's going to go down and I don't know how far it's going to go up, but it will eventually find a bottom and it'll eventually go past that and back up to break even and beyond. It's happened every single time forever. It's like arguing about the sun rising. It's literally, it's going to happen tomorrow. Guaranteed. It's going to happen. It's going to go down, but it's going to come back up. It's that simple.
Well, let's talk about, obviously, with Iran being a significant producer of oil, also controlling the Hormuz Strait, them, saying it's shut down, and then, sources saying it's still open and it's shut down. And now, Trump essentially saying that the Navy is willing to escort, people through the Hormuz Strait. We've seen
going to do anything.
U.S. crude oil prices, I think, jumped up $77 a barrel to the highest level since January of last year. So, I mean, not anything too outlandish or, significant that we haven't already seen or felt in, call it the recent past.
The prior administration.
Yep, exactly. So, how quickly for those that don't understand, how quickly does higher oil feed into consumer psychology again? Like, is this a supply story Or is this a geopolitical, premium that's creeping back into the narrative that they're going to use? How worried should we be about this? And Trump even went out today and said, when all this is settled, which it sounds like he doesn't want this to go on for very long. I don't think that he can afford for this to go on for very long going into the midterms personally. So I think he's going to have some urgency to get this wrapped up and find a ceasefire. And again, who knows, maybe we're entering another forever war. I don't think it's going to be that. It doesn't feel like it's going to be that. But again, what do I know? But that being said, he mentioned, hey, you're going to see prices way lower than they've ever been, and even in recent history with how low he got them. So how big of a talking point is this, and how big of a concern really is this on the oil side?
I think it's timing-wise, it's important because we're moving into the spring and summer months where leisure travel tends to increase. And plane tickets are directly affected by fuel costs.
Yep.
Shipping costs are directly, everything quite literally becomes more expensive. It's a hinge point that cannot be avoided. That we need fuel to move items, ship them, create, garden. I mean, everything. So it is not the greatest thing, and the consumer tends to feel that the quickest because overnight they go and get gas, and the next day it's 20 cents more a gallon. But that being said, 20 times 20 is $4. So I mean, like, it's not that big of a deal.
Yeah.
I mean, people make it a big deal. It's like, oh my God, it's 20 cents a gallon. For sure. Go be a Costco gas buyer then and wait an hour in line to save $4. But it's not that bad. I didn't hear anybody bitching when it was like $6.50 under Biden, and I was getting wrecked at the pump. And everyone's like, "Oh, this is great. Biden fucking doesn't, he doesn't have any idea what's going on, but nothing's wrong." And now people are bitching because it's back up to $4. Literally, we're retards. So to me, I think that if we hyper focus on the short term, you're going to get short term results, which is not successful for long term investors. What we can know in the short term is if we see red and the market is looking like it is now, that tends to tell me it's a good time to get in. Things are on sale. So the thing I always say is when I go to Nugget and they got prime filet, $5 off a pound, I'm not like, oh no, that's terrible. I don't want to get any discount. I want to pay full price. In fact, charge me $5 more than you have it listed. I'm happy to save the $10 on the two fillets.
Yeah. Now, one of the things that I was thinking about, whether you love the volatility or hate it that Trump creates, I really believe that there's, as an investor, right? Like, let's just remove the emotions and the sentiment around whatever the, chaos is that he is creating. As an investor, you'd be remiss if you weren't looking at what he does and how he does it as an opportunity, right? I mean, if you think about his, I saw this was the Kobe Essie letter, and he puts out some good stuff every once in a while. And one of the things that he talked about, he had a really good one on the tariff playbook and how Trump uses tariffs and like how there's some real opportunity in tariffs, right? With his negotiating and, tweeting and posturing with tariff policy. And some of the volatility and opportunity that creates. He also kind of used a breakdown of what he calls the Trump Conflict Playbook and kind of an investor step-by-step guide on how to, use Trump's conflicts to create opportunity for yourself as well. And I think, you were alluding to it a little bit earlier, is like when this volatility happens and you see little pullbacks, like these are the opportunities that investors should be really leaning into and thinking about taking advantage of, right? Outside of,
man.
yeah. And
here's your sign.
If
it is that, I'm not saying you're going to catch the bottom.
Right.
But if I was for sure buying the S&P at 6,800, and so was everybody else last fall.
Yep.
What changed? Tell me what changed.
Yeah.
I'm just really curious on, so why aren't you buying at 67? Especially when it's 67 at 9 a.m. and it's 68 again at 3 p.m. What's the problem?
Yeah.
It's the psychology that is fed to investors on financial news that you have to try to time the market. market's down, should investors go to cash? It's such a disservice. I mean, I love watching the interviews and things like that. There's some interesting stuff, but like their financial advice is pretty terrible. I mean, the people that go on there, they're the same people for a reason. All the smart people are making their clients money like me.
Mm-hmm. Yeah,
So
they're
just
more of the personalities, the
Jim
actors of the
Cramer
space.
and oh my gosh, just
But
watch
so
the lady at Watchtower who just is terrible. So anyway, they're just it's the problem is though, people think, and especially older individuals who are in the boomer generation, the news used to be the news, man. It was like reliable.
yeah,
Reporters were on the side of the consumer. Now with cronyism and division at an all-time high, the news is just mostly full of shit.
yeah,
Nothing that you can really make a reaction off of it, or like this isn't breaking news. This is well known by the time it's here. So it's just not what it used to be, man. So
yeah.
everybody should. I would not recommend following headline news for investing. I don't think any advisor would.
Well, and why I liked this little conflict playbook that he mapped out, right? I think, as an investor, you don't need to have all the answers. You don't need to have the silver bullet. You don't need to have the quantum analyst, telling you when to buy. Not like there are some frameworks and some strategies that you can see patterns over and over, create more predictable outcomes, right? And Trump's conflict playbook is one of them. Predictable shock, creating some kind of shock wave through the market, which then creates the volatility, which then leads to some level of negotiation or conversation, which then leads to some level of resolution or relief, which then creates, right, a more positive upside and outcome from, where the volatility initially created the entry point. So I just think it's something to maybe pay attention to, right? I guess the question around that is, are markets going to continue to react to Trump's, kind of playbooks like this? Or do you think over time the markets are going to start to be more, better at absorbing them, instead of reacting every time, and at what point does that, repeatable, strategy stop creating opportunity and maybe start to create some potential structural risk to the overall system?
Good questions. I think the answer to that is that improvement should happen over time.
Mm-hmm.
Not that it will, but that it should. Kind of how investors, I've told people you got to not focus on what Trump says, but what he's signaling by what he says. And I think that people are starting to catch on to that. And I also think the reason that we had so much money go into the market today was because people are privy to that information and understand that it's going to bring in volatility because there's a lot of people that don't like Donald Trump. And so they're going to react emotionally like they already are by saying they don't like Donald Trump.
Yep.
Um, and they're going to make emotional decisions. The thing, I don't get, I don't get it. I mean, we had none of this volatility. The weird thing is when I look back under the Obama administration, I found 7 times where we did like airstrikes and stuff like this, maybe not to this level. The market never reacted this way.
Hmm.
So I mean, it's kind of like TDS. It's really just people not liking a person so much that anything they do, they're reactive off of. And that can include large institutions, especially European ones. We saw that one freaking drop in the puddle fund of 200 something million or even 200 billion, still not a big player, saying they were going to sell all their US bonds. Boom.
Yeah. Yeah. What was
Guess what's going to happen at auction? They're going to get bought. So you just got to know that and just know people hate Trump. I don't hate him. I think he's not the greatest person, but I'm smart enough to be an adult about it. And you can make a lot of money with the guy. He's got good policy. He just, doesn't say the right thing all the time, and he has this weird personality that kind of comes out, and that's something you just got to be accepting of. I didn't like Obama, but I made money under him, and I didn't, I complained about some of his policies, but we put money to work where we're going to make money under him, and I didn't like Biden at all. So you can make money in any administration. You just have to understand, like, Biden wasn't going to come to the rescue of the economy. So when the recession was happening, it was going to be long and drawn out like it was. Trump is not going to let the economy go down. So he's going to do what he needs to do, but he's going to make sure it benefits people that are investing, because he's a businessman and he's going to make money too after he gets out of the presidency, for being frank.
Yeah.
So just understanding that on a basic level can make you a high level investor. I understand that. Most of my clients understand that. I get emails every once in a while, what's going on with war. I pretty much saying a really fancy way, we don't care. We really don't care. Because A, there is no war going on.
Yep.
B, it's likely not going to turn into a war. And C, if it does, well, we're going to rotate out of probably tech a little bit and go into U.S. aerospace and defense and industrials and energy, because that's what will start making money. Very simple. People get all freaked out like there's nowhere to make money. There's always somewhere to make money.
Yeah.
It's just you got to follow it.
Now, is the June, according to Goldman Sachs, the June rate cut is still the base case? It's still on the table. It's
I'm June, July, and I've been saying that since last fall. And I'm sticking to my guns. I'm getting better at this, predicting these rate cut things based on futures. But I mean, we're at a 43% chance of a cut in July and a 36% chance of a cut in June. That's going to change very rapidly with what happens in the and with the geopolitical. We do have a December rate cut baked in, which is the last time they did that. December rate cuts are great in my opinion, because you start the year off with loosening of money supply. So I think we're going to get like a summer and a fall cut.
okay.
My opinion would be the fall cut would be more productive if it was in like November or September, but they may wait till the end of the year. Time will kind of tell with the current, whatchamacallit, the new Jerome Powell.
Yeah, Kevin Warsh, right? I mean, obviously the transition of the Fed chair coming in. I mean, obviously eyes are still on inflation. January PPI came in at 2.9, which is above the expectations of 2.6. So
it's sub 3.
Which
who cares?
And that's, I think, right. If people
so obsessed with 0% interest,
I was going to say, if can have a number higher than the number that was expected, all of a sudden, I think it's terrible and bad news, and it means that everything is melting up. But to your point, zooming out and really looking at the grand scheme of where inflation is at in relation to where it's been.
Yeah, still this time last year is like 3.8. I mean, are we really? Yeah, people are wild.
It's the highest since July of 2025. So, oh my gosh, 7 months, 8 months.
7 months ago. Good Lord.
Now, do you see any signs of concern? I know we continue to keep talking about these things, right? Around like the consumer, we saw 4.8% of all household debt is delinquent, which was the highest overall delinquency rate in nearly a decade. We saw that, foreign central banks now hold more gold than U.S. treasuries for the first time in almost 30 years. We've got obviously the parabolic run that precious metals, which has obviously been a hedge for a variety of reasons and a safe haven for capital. When there seems to be some concerns about whether it's the U.S. dollar or it's the economy as a whole, do you see, is this just, again, all noise and little headlines that, people are looking into too much? And here's the other thing, right? Like U.S. wages, I saw this barely keeping pace with inflation. So since 2020, average weekly earnings adjusted for inflation have increased just 3.7%. So in other words, inflation has wiped out most income gains for Americans. And so knowing that obviously, the American consumer is the gasoline to the engine of this, powerful economy that really drives much of the world. And this comes as the costs of living in the U.S. have significantly increased. We know what's going on with, housing and the unaffordability there. Utility gas service prices have jumped 56%. So electricity prices are way up 41%, while home insurance is up 14%. I mean, I could go down the list. We got, cars and truck prices are way up. We've got vehicle insurance way up. So it seems like we've seen so many key and critical components that impact the actual consumer We haven't seen wages grow that much. We see debt continuing to increase. Like, is there going to be a point in time where this all catches up and causes some pretty big fractures within the consumer and the economy as a whole?
I don't think so, because the people that are in those statistics are lower middle class, typically, or low, or I don't want to say lower class. It sounds like a negative connotation, but it's a financial. Um, they're 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 not making that much money, so they're making bad money decisions. Those are people that middle class buyers loaded up on car debt and now can't afford the payment. I mean, so I don't see that causing a huge impact to the economy, minus the fact that it would be bad for those consumer segments. But their portion of consumption compared to upper middle and upper class purchasers is paltry. It's less than probably 10%. So it's just not that big of a deal. Um, when we look at defaults on luxury items, or if I was seeing, people that are reporting this are like Bank of America. I don't know. Do you have a Bank of America credit card?
No. I have a Bank of America account, but I don't have a credit card with them. Of the 30 credit cards I have, I don't have a
Have
Bank
you
of
ever
America
seen
one.
anybody that's doing really well with a Bank of America credit card? I'm not trying to be an asshole. I'm just being real with you guys.
Yeah.
No, they use American Express typically, or Chase Sapphire.
Mm-hmm.
They're using high. Go look at the default rates on that. They are in default. So the people that spend money and actually drive the economy, they're doing fine. They're not doing bad, and their wage growth has actually superseded inflation over the years. Dumb people will always not make smart decisions, and they don't. They refuse help. They use excuses like race or education, that they can't get things. Those people will always be in those categories. They will never get out of it. They're just always there. The entrepreneurs, the people that move the needle, they're not, because they choose not to do that. You and I both could have chosen to be a statistic, but we chose to not be a statistic, and it was hard and it was scary. And we had to make big decisions. You are making a lot currently with your current venture that we talk about frequently, among other things. And it's stressful. And so people don't want to do it. But are you doing well in life? I think so. I'm doing pretty well in life. I'm not defaulting on any of my debt. I have a crap load of credit card debt that I clear out every single month. So I don't think that that's going to affect people like us. I know it's going to affect people that are racking up 20 grand on a firm or Klarna because they can't be patient and just wait till they have the money for it. I know it's going to affect people that go buy cars that are way outside of their price range so they can show off to people. I know it's going to affect people that go buy luxury goods that can't afford them, like Louis Vuitton, Gucci, things like that. I know it's going to affect those people. It's just not going to affect people like us, and we keep the economy moving forward. Respectfully to everybody that is in that category, but that's just the facts as they are.
Yeah. Well, I know that a lot of people have been challenged and struggling to figure out how to navigate the real estate and housing market. And I'll just speak to the single family market.
That I can bend the knee on, and that's a money supply issue.
Yeah, I mean, there's definitely some signs of a crisis that are still very much there and somewhat brewing and gaining levels of momentum. I mean, obviously we've got housing that's way overpriced. Monthly payments don't make sense as a multiple of median income, right? So the affordability delta is really skewed right now. Insurance and taxes are too high. Now you've got, AI is somewhat creating some of this, white collar job anxiety for a lot of people. You've got interest rates are still somewhat of a headwind that people are struggling with. That's, compressing positive sentiment in the space. Now we're seeing recently 1 in 7 home sales are falling through, which is a record for this time of year per Redfin. We saw 49% of U.S. residents on a new Redfin study that just came out are struggling to pay rent or mortgages. We've got some challenges that I think the housing market is still trying to, sort through. I know Bill Pulte and Trump are doing their best, and we have seen rates come down a little bit. I mean, I'm on my shopping center deal. I went from a debt shop that was, somewhat hard money type of terms on, building out for TJ Maxx and Harbor Freight at 10% to a local community bank that 12 months ago, wouldn't touch it or were kind of like sitting on the sidelines to offering me a 6% rate on pretty aggressive, loan structure. I mean, that's not
That's a 40% delta.
well, and on top of that, right? I mean, these are opportunities that they wouldn't have deployed capital to previously, right? And so now, based on a lot of the debt and capital market relationships that I've got, we are seeing, some loosening of the capital supply want to get redeployed back into the marketplace, which is obviously, outside of all the noise that we're hearing and seeing, right? War this, tariff that, economy concern X, Y, and Z. You got to pay attention to what, the smart money is doing. Just like you said, retail today was selling off and it was a major, sell the news type of event. And who came back in and bought up more than, half of it within a blink of an eye? Institutional smart money capital. So I never discount, I like to try and find a balance with the noise and is there any truth in some of these headlines, and also be very discerning around what I get wrapped up in emotionally and just go, okay, hold on. The smart money doesn't drive with emotion. They drive with data. They drive with their resources. They drive with their experience. They drive with, the behind the door relationships and where they really think and know things are going, and they position accordingly well before what anybody else really knows what's going on. And so just to see that the housing market is somewhat cracking open a little bit with capital, and if we get some of these rate cuts that we are expecting, at least that are priced in and probable at this stage, I think that could be very opportunistic for, the housing market and anybody that's looking to enter. And ultimately, if we do see some of these even more concerning, things play out that theoretically could cause a crash in the housing market, it could end up being one of the best buying opportunities that we've seen in a really long time. We're going to see people have more financial incentive to get out of their home. So we'll see more supply. We'll see more demand tick up because people will have, an economic incentive to actually get into something that makes financial sense for them. Right now, we've got only 17% of people think it's a good time to buy a home. So until we see, one, the sentiment and the psychology shift, and two, the physical reality of how that impacts your pocketbook align with that, I still think we're in this somewhat challenging stalemate of a market. But I do believe that there's going to be some very opportunistic buying opportunities. And I do think that we'll see some house, values pull back to reasonable levels that they probably should be at, right? With these headwinds and the variables that have been in the market over the last few years, it's created, great value in people's homes, but you can't eat your value. You can't use your value to pay your mortgage and your bills. So, there's going to be people that, based on the dynamics and how this all plays out, are going to want to cash in on that value, and they're going to find ways to protect some of that value, but utilize it in different ways and put it to work in the market. And so I think this is all necessary and healthy. And I do believe that we'll start to see some of this stuff shake out. Honestly, probably not this year, but maybe leading into next year and the years to come. So as you noted, right, when you're talking about some of these big, pillars of the economy, these things don't change and shift overnight. They're the cruise ship, not the speedboat. They take time to shift and absorb policy and start to play out. And obviously, we know a lot of the data is all in the rearview mirror and in hindsight. So I do think that there's going to be some great opportunities. And if you're somebody that can be patient right now and doesn't have to buy, I think there are going to be, brighter days ahead and better opportunities ahead that are going to be advantageous for everybody, including the economy and the market as a whole. So we'll keep an eye on that. In terms of the commercial real estate side, I still see a lot of challenges in terms of development and economic modeling, making any kind of financial sense for what risk is tied to, taking some of these opportunities on and moving them forward, especially in multifamily, especially in development. We saw, Commercial loans flagged for March foreclosure sales just in the state of Texas topped 800 million for the fourth month in a row. And 70% of those properties headed for auction. And remember, Texas was like one of the hottest markets in 20 to 22, right? So I'm just using this as a...
Rents are compressing. They're super aggressive. They have a way oversupply. I mean, I was on Rainy Street there a couple days ago, and it's like, dude, I think there's 1,700 available units on one street, and none of them they're all lease units. So 18-month leases, and they were going for like $67,000, $8,000 a month. They're trying to get people in there so bad. They're at like $3,000 a month.
Yeah. I mean, and rightfully so. I mean, this is the beauty of the free and fair markets that we have is people get to a point where they go, fuck that. I'm not going to pay that. That's insane, right? And developers and investors should be getting checked by the consumer. I do believe in the freedom of fair markets is a great thing because it puts power in the consumer's hands. And so when things are great and frothy, well, if you're willing to pay it, then let the consumer drive what those trends and the investors can move forward with. And vice versa, when things aren't as rosy and sexy as they once were, well, guess what, Mr. Investor, you got to handle that too. 70% of the properties that are headed to auction are apartment complexes, just to give you an idea. And obviously this is specifically in Texas, but we've seen this in Tennessee. We've seen stuff like this in Florida. Some of those, red states and frothy markets that got pretty wild. Phoenix, I think, was another one, or some, cities in Arizona. So again, this is all necessary, in my opinion, to allow cycles to run the way that they always do, peaks, valleys, and troughs, and finding where the opportunities are, just like you said, whether it's a frothy market or it's a depressing market, I'm still finding opportunities in real estate, and you just have to stay opportunistic, nimble, and adapt to what, the cycle is giving you. Meet the market where it's at. So we will continue to track the data there. As we wrap up, any final thoughts to close out the quarter as we head into the tail end of March?
No, I think that it's going to be geopolitical talk for the next couple of weeks, and then we can roll into a fresh earnings season and summertime consumer spending. So I think those are the things to look forward. We have PMI on ISM services this week, plus non-farm on Friday. So I think Friday is going to be the biggest data-driven day for the market. But let's see what happens. Let's see if we go green or red.
Well, be sure to tune in next week. We will have all of the news, data, and facts for you to dissect as you make your investment decisions. As always, we appreciate you guys tuning in. Keep investing in yourself and your wealth on your March to $1 million beyond. Cheers.
Cheers, y'all.